Hey guys, Joel Frank here, market analyst for YouTrading, and in today's educational video we're going to be taking a quick look at an example, the S&P 500 to be exact, of how you can implement ranges into your trading strategies, and sometimes how ranges will come about, what you need to be looking for, how you can potentially trade them. So let's jump straight into the charts here. Like I said, S&P 500, or at least this is the a CFD that tracks the price of the S&P 500 futures market, and you can see that it's been fairly range bound between 3,900 and the mid 4,000s in the last couple of days. So let's actually draw up this range, and you can see how we've been responding. So we've got the recent high here around 4,040 or just above, and then you've got the support area just around 3,900. That was previously resistance, good area of resistance actually in late October, early November, and then it turned into a good area of support. Now we've also got some key moving averages adding to the strength of the support and resistance of these levels in this range. You've got the 200-day moving average here in green, which coincides almost exactly with these recent highs that we're topping out at. And then you've got the 21-day moving average around 3,900. So these are really nice areas of support and resistance at the moment. And I mean, the way you want to trade these, it's pretty simple, to be honest. If you think that a market is going to be range bound, usually for some fundamental reasons, maybe there's a lack of important macro events coming up, and the market's kind of in wait and see mode. Maybe you've got a week or 2 weeks until the next big event, like the next big Fed meeting or the next big data release or blah, blah, blah. For whatever reason, you think there isn't really reason for a big breakout. What you want to be looking to do is buying low and selling high. So an example of that could be, you could have been earlier this week when we had this little drop off, you could have been looking in the 3,900 area to be adding to longs in this sort of area just above the support, and maybe placing your stop loss just below the support, because obviously if you did get a breakdown below this support area, then that could prove that your thesis is wrong, basically, that your expectation that you're going to be range bound is wrong. Likewise, you could be looking to add to short positions as you come and test these recent highs, and placing your stop a little bit above. Pretty simple, really, guys, to be honest. In terms of a little bit more specific as to what's going on in the market at the moment, the S&P 500 is at quite an important area, I think. You've got this downtrend that it's been in all year. You've got the 200-day moving average, which has, in the last couple of months, been a very, very strong area of resistance. We're not breaking through it just yet, but it's because, we had Thanksgiving yesterday and it's a quiet market today. This week has very much been a range-bound, or it's been actually a pretty strong week for stocks. Like they're set to post pretty decent gains. But as you can see, we've stayed within recent ranges. Yeah, look, we're about 1.5% higher in the S&P 500, but still within recent ranges, which is what I was expecting. I was talking about this earlier this week, because we didn't really have any key macro events this week. Like the most important thing, arguably, was the Fed meeting minutes on Wednesday and the Fed speakers, who have pretty much all sort of unified behind this idea of a slowdown in the pace of rate hikes. You've also got US inflation, which appears to be peaking, which caused this big rally a couple of weeks ago. But then you've got the US jobs market, which is still very, very hot. So that will be the next big catalyst. Next week, at the end of next week, we get the official US jobs report for November, and then the Fed meeting next month as well, and then the next CPI report. But if we continue to have this situation where it looks like peak Fed hawkishness has come and gone, US inflation is coming down rapidly, and if there are any signs that the US labour market is also starting to weaken, then this can all feed into the slightly more dovish Fed story that I think could potentially be a catalyst that could send us out of this range, above the 200-day moving average, and potentially above this downtrend. And if we did get that break, and actually before I show you where I'd be targeting, if we do get that break and then confirmation with a retest and then another push higher, I would be looking at this 4,300 area as my potential target for sometime in December potentially. Remember, we do normally get a bit of a Santa rally. And another thing to be looking at, guys, is it's Black Friday today, which is a big day in the US for retailers. So we're going to get these numbers out pretty soon about how this Black Friday has gone, and if it's better than expected, but stronger than expected, but not too inflationary, then it should be also potentially good for stocks. But anyway, yeah, guys, that's pretty much the video. I hope it helped shed some light on how you can implement ranges into your trading. And I will see you all in the next one.